Hello everyone, this is Sananaim and you are watching SNS Study Station. So today what we are going to discuss, that is debentures. Okay, sources of finance, you have seen various types. You have seen equity shares, preference shares, how we can collect money, how we can arrange money through shares. Now we are going to see what is debentures, how the money can be arranged, how the arrangement of money can be done through debentures. So first, let us understand the meaning of debentures. See, you all know about loan. Okay, you all know about loan. So, in loan, what happens? If a person takes loan, suppose a person takes loan from a bank. So, he has taken loan on a certain date and bank gives loan to that person on some security, and then bank gives loan for some time period, let's say for 2 years, bank has given loan to an individual. So that individual has to repay the loan after 2 years and along with interest. Not just that loan amount, he has to pay the interest also. So that interest also, it can be any percentage, depends on the policy of the bank. So debenture is also a type of loan. Okay. But what happens in case of debentures? Like loans are taken through organizations. Whenever someone needs to take, if someone wants to take loan, so they can take loan from any organization. They cannot take loan from any individual. But in debentures, what happens? These are also loans. In debentures, what is the case? If a person wants to take in debentures, what happens? A company issued debentures. It is a certificate which is issued by the company. Means if the company has issued debentures, the person who is going to purchase it, it means they are giving loan to the company. If any person is purchasing the debentures, that means they are giving loan to the company. So debenture is that kind of loan which can be taken through any individual. Like you have seen shares. So in the same way, like shares are issued, debentures can also be issued. Debenture is a document or a certificate issued by the company with the seal. It has the seal of the company. It is a debt for the organization. Like I said, it is a kind of loan for the organization. So it is a debt and company has to pay regular interest on this debentures. Like in loans, what happens? Similarly, in debentures also, if I was saying, if a company has issued debentures, let's say company has issued 10,000 debentures. Okay, 10,000 debentures at rupees 100 each. Means one debenture is of 100 rupees. So here company has divided the amount. 10,000 debentures of rupees 100 each. That means it will be 10 lakh. 10 lakh total. 10 lakh rupees company needs, for which it has issued debentures. So 10,000 debentures it has issued. So any individual can purchase any number of debentures. If an individual can purchase 500 debentures, even one debenture also, depends on how much trust he has on the company, how much interested he is in the company, how much how much money he is having. So based on all the things, a person can decide how many debentures he wants to purchase for that company. So the debenture holder, they are the creditors of the company. The moment they will purchase debentures, they become the creditors of the company and the company has to pay them regular interest. No matter if the company is having losses also, even at that time it has to pay interest to the debenture holders because it is a type of debt. It is a type of loan. Now let us know more about the debentures. So we'll see about the types of debentures. See, secured debentures. So as I said, it is a debt for the company. So what happens if the company is taking debt from any individual? Debentures are a debt which are taken from the individual. So if the company is taking debt from any individual, so it should be secured also. So in secured debentures, what happens? If the company is not able to repay the debts, or it is not able to pay the interest, that regular interest on the debentures, so company can, the debenture holders have the right over company's assets. They can take the company's assets and they can sell it for getting their amount back. In unsecured debentures, they do not have this kind of rights. Okay, means secured, they will have rights over the company's assets. They can sell the company's assets, or they can take the company's assets and they can recover their amount, recover their debt amount. And unsecured debentures, they do not have right over the company's assets. Their debentures are unsecured. Redeemable and irredeemable debentures. So in redeemable, like you have seen redeemable preference shares also. So there is a certain time period, means after that duration, the debentures, if a person has purchased debentures, so they can sell it. There is a maturity period, but in irredeemable, there is no maturity period. Once the debentures have been taken, it cannot be sold. Only regular interest they will get from the company. That's it. Guaranteed debentures means if suppose in some cases company is not giving any guarantee, or even if the company is giving guarantee also, if company is giving guarantee also, then these debenture holders are guaranteed, means they can take their amount back from, they get the guarantee from different banks, from SEBI, Securities and Exchange Board of India, and other than the company, they will get guarantee for their debenture amount. Okay, if it is not repaid by the company. Convertible means these debenture holders, normally convertible debentures we have either fully convertible or partly convertible, means these debenture holders can convert themselves into equity shares either fully or partly. So it depends on the company's policies. Now let us see the features. Maturity period means they have mostly 10 to 20 years of maturity period, means debentures once purchased, it can be sold after 10 years or 20 years on in between this duration, or it can be converted also. Residual claims in income means like in shares, we have two types of shares, equity and preference. So preference shareholders have preference over equity shares, means whenever the profits are distributed to the company, it is distributed to preference shareholders first, then it goes to equity shareholders. So in case of debentures, first if any income is there in the company, first the interest will be paid to debenture holders, then preference, then equity. That's it. So they have preference on this. Residual claim on assets means they can claim on company's assets. They can claim on company's assets for getting their money back if the company is unable to pay them interest or pay them their money, their principal amount. No voting rights, obviously they are the outsiders, they are the creditors of the company. They are eligible only for regular interest from the company and they don't have any voting rights in the company. Fixed rate of interest means there is fixed rate, there is regular interest which they are getting. That's it. Now let's see the merits and demerits of the debentures. So we have merits. Long-term source means it has long maturity period. It is a from the company's perspective, it is a long-term source for the company, as we are learning about long-term source only, long-term sources of finance we are seeing. So it is a long-term source to the company, means once debentures is issued by the company, that amount is being circulated in the market, means they can purchase the debentures. So the company gets money through it, and interest the company has to pay, but that principal amount company will keep with themselves and it can use it for a long duration of time. Fixed rate of interest for debenture holders, it is a advantage that they are getting regular interest. Income tax deduction means it is exempted from tax. You have seen cost of capital, that chapter you have seen there, cost of debt, you have seen questions, problems we have solved na? So there you have seen ki what happens ki tax deduction means if whenever we are calculating cost of debt, cost of debentures, so there we get the advantage of tax. Now protection, certified by SEBI. SEBI is the guarantor of the shares, debentures, everything. SEBI, all these things are regulated by SEBI. So if the company is doing any default, if the company is doing any fraud with the debenture holders, with the creditors of the company, so SEBI can give you protection against that. Demerits fixed rate of interest. See, in the merits also there is fixed rate and in the demerits also. So for the debenture holders, this is a merit fixed rate because they are getting regular income, and for the company it is a demerit because even the company is having losses and also they have to pay interest to the debenture holders. So how they are going to pay that? It is a demerit to the company. In profits situations it is good, everything is good, but in losses it is bad, and anyway they have to pay. That burden is on them, on the company. No voting rights for debenture holders. They do not have any voting rights, so they can't make policies, they can't participate in voting. Creditors of the company. So debenture holders are the creditors of the company, and for the company, company has this burden. Against that same thing, company has this burden that the company has to pay them along with interest. Company has to pay them their principal amount. High risk. They for the company, interest is to be paid despite loss. So even at not so good conditions also, company has to pay the interest, and company is eligible to pay them their money back. So it is a risk. It is risky for the company. If the company is not performing well, so it is very risky. Restriction on further issues. So for the company, there is restriction on issuing debentures. So it can issue one time. After that, there are some restrictions to issue debentures. So it is a good source of finance for the company. It is a long-term source of finance for the company, but there are restrictions on the company to issue it. It cannot issue more debentures. It cannot issue more than 1 or 2 times, or depends on the rules and regulations. So that's it about debentures. We'll see few more topics are left. Sources of finance. In this sources of finance, there are few more things which are left, so that we'll cover in the next video, next session. Okay, so thank you and keep watching.